Hello, this is Matt on the Moon Lambo channel. The doomsday proponents of crypto and XRP specifically are wrong. And in fact, you're going to love this. I'm going to share with you a chart I had not seen before, but as it turns out, Bloomberg's been tracking an interesting metric. So it tracks the number of bear market articles being thrust upon an unsuspecting public, and lines that up when that's happening with the quantity of articles, lines that up with actual price action. It's really astonishing to see, and I'll tell you what, if history continues to persist, then this might be well known as a bottom indicator. So whether we're literally at the bottom right now, we've already seen it, or even if it goes a little bit lower, fine. If history repeats, then this is a strong bottom indicator. I'm going to show you the chart very soon in this video here. It's just fascinating stuff here. But look, from the perspective of the analysts that I follow, there is no doomsday here. In fact, I'm going to share with you thoughts from one analyst who says that really what we're seeing here, and it's also be true of XRP or Bitcoin or pick your crypto since the market moves in tandem, we're just seeing a longer market cycle than we're historically used to with deeper corrections. But he says structurally, other than that, if you look at the structure of the actual cycle, yeah, that part is still what you'd expect. That's the argument that he's making. But, so plenty to discuss here. But before going any further, I do want to be clear. I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. As I record this, XRP is at 40 cents, Bitcoin's at $29,639. Market cap for the asset class, 1.28 trillion, and Bitcoin dominance is 43.91%. So not a lot has changed in recent days. It's volatile just because crypto is volatile, but it's range bound right now. Here's a crypto fear and greed index at 12 out of 100. It updates once every 24 hours. It will update again in 12 minutes. So if the video is still going on, then I'll try and remember to wrap around and hit refresh on this just to see where it's at. But at the time I'm recording this, it's at 12 out of 100, indicating that the typical retail speculator is in extreme fear. Now, here's a tweet from former Goldman Sachs executive Raoul Pal, who also, by the way, happens to be a proponent for the idea of XRP exceeding $10. And he wrote the following: "It is so sad to see Twitter dissolve into angry people. Value our commodity investors, Bitcoin maxis, and other non-pragmatists all screaming at anyone with different views. This is just investments, not a philosophical justice war. We all have different views, and it's okay. Be nice." Good tweet. And so he's right. Obviously, crypto is tribal. That's kind of part of human nature, so I recognize that. But it's been getting that much more nasty now that everybody's in bear market mode. That's what it feels like. So whether it's an actual bear market by technical definition or not, it's a discussion for a separate video. Some people argue yes, some argue no. People are responding as though it is. That's what I'm saying. The way that they're actually behaving. And if you want another bottom indicator, actually take a look at this one too. Here's a headline from CNBC. Bitcoin could fall to $8,000. A more than 70% plunge, Guggenheim's Minard says. Bitcoin could drop further and fall to $8,000 from its current levels, Guggenheim Chief Investment Officer Scott Minard predicted Monday. That would represent a more than 70% drop to Monday morning's price of just over $30,000. So, worth noting, Guggenheim, this is not a fly-by-night company. They have somewhere in the neighborhood of like $325 billion in assets under management. And this guy keeps making the news, though. He's the chief investment officer at Guggenheim. Is he just really bad at investing, or is he being disingenuous? Because take a look at this. This is a tweet that I came across from somebody named Imhan Kassalo, who charted the price action of Bitcoin and pointed at headlines resulting from what Scott Minard said at various points over the last couple years. And so you can see right here where I'm circling, for those of you looking, there is a headline when, I'll just read the tweet first. That gets the idea across. It's fine. So the tweet author wrote the following: Scott Minard, Bitcoin price calls. He was calling for $600,000 Bitcoin when Bitcoin was worth $60,000 and it went to $30,000. So again, he's saying Bitcoin going to 600,000. It's 60,000 a day. It's going to 600,000. It actually went to 30,000. Now, when Bitcoin was at $30,000, he was calling for it to drop down to $10,000. Massive drop, which is about where it's at now. So I think it was just last summer, actually. It was at 30,000 calling for $10,000, scaring people. But what happened? XRP went to $65,000. Or not XRP, Bitcoin. I didn't mean to say that. Bitcoin, that would be nice. Bitcoin was at 30,000, went to 65,000 when he was calling for 10,000. So now, Bitcoin's at $30,000 yet again. He's calling for $8,000. So what's going to happen? Well, basically, it looks like anything that Scott Minerd at Guggenheim says is going to happen, just assume the opposite is going to happen. So why would he be doing this? Why would? Because I mean, do you think he actually believes what he's saying? Might he just be trying to scare people and hoping to buy more cheap Bitcoin? Because presumably at these tops, when he's saying it's going to keep running, he's probably selling there. It's just funny to see the behavior again and again and again. And as far as the fear out there, this is the chart I was referencing at the outset of the video. Now, this is interesting. I've not seen this one before, but I'm going to try and remember to track this moving forward. This was shared on Twitter by somebody named Jason Gopfert, and the data comes from Bloomberg. So here's the headline for this chart: rushing out bear market articles for weekend reading. And the tweet reads as follows. And if you can look, it's worth looking. But Jason wrote, just in time to capitalize on worries and make your weekend miserable, journalists published over 3,700 articles about bear markets on Friday alone. 3,700. Only a single day in the past decade, a day the S&P 500 dropped nearly 10%, eclipsed this level of fear peddling. So if you look along the bottom, right here, it looks like there's random skyscrapers popping up off of a city skyline here. This bottom portion here, this is the number of articles mentioning bear market, daily number of articles mentioning bear market. And then up here, this is the S&P 500. So what are you noticing? And again, this is important for crypto because crypto historically follows equities. It's following the stock market. So when you're looking at the S&P 500, which is an index of 500 companies tracked in the United States, you're seeing this. And when you're seeing the S&P 500 tank down, at the same time, you're seeing, right where I'm circling, the 3,700 articles on Friday alone just spike right there. So what you see is, and historically, if you go back to March 12th, 2020, which was the only day where even more articles were, March 12th, 2020, you guys may remember that. That's around the time when XRP crashed down to like 11 cents. Bitcoin got down to like whatever it was, $3,800 or something like that. Well, that was the bottom, folks. That was the bottom. So look at the crazy number of articles talking about bear markets. That was the bottom. And you can look at other times where there were notable drops that maybe they weren't quite as scary, but look where I'm circling here. So this would have been about halfway through 2018 drop here. Look at the articles popping up. And what's it doing to people? It's scaring the hell out of them. That's why my stance, it's never the case here that the United States economy is going to stop existing. Okay, it's been trending upwards. Just go back to the beginning of time. Been trending upwards despite massive pullbacks, despite an actual depression about 100 years ago. You know, despite an actual depression and multiple recessions since then, it still trends up. And so if you don't think it's ever going to, then okay, hey, maybe it makes sense to pull your money out. You know, if you want to play that bet, if you really want to, I think that's silly. You know, but if you really think the economy is never going to come back, that means these prices would never go back up. Okay. But the truth is, people pulling out their money, pulling out of stocks and crypto, I just think they're going to have tremendous regret in the future. And that's my suspicion as an everyday unprofessional opinion. So I'm not telling you to buy or sell or hold, but I think historically what I'm saying here, history's borne that out, has it not? And you can look at other instances. Like here's halfway through 2015, roughly, another spike in fear articles, and you can see there was a corresponding dip. Right, it was all happening at the same time. These are bottom indicators. And so, look, I don't know if we're exactly at the bottom now, but I'm just saying historically, like, wouldn't you expect that just to be at least close, somewhat close? I mean, I think it's reasonable to suspect we might be. And so if not, okay, fine. But what would make us not be? I mean, I guess if something way out of left field happens on a global level that's, like a pandemic level type thing that I can't even imagine. If something like that happens, okay, fine. All bets are off at that point. But outside of something like this, what do you think? I'm just saying. I'm gonna have to try and remember to track this one because it's just I found it that interesting just staring at this. I'm like, wow, these poor people because they're reading this stuff because this coincides with people selling, obviously. So they're literally fearful and selling, and they just have no idea they're being fed a bunch of stuff that's making them even more likely to do that. It's unfortunate, folks. But I don't think it makes sense to be fearful. Even if price goes lower, I'm a super duper long-term guy. And a credible crypto chart analyst, he doesn't think it makes sense to be fearful either, and he shared this with his 333,000 followers. A thread. Our Wave 2 and Wave 4 corrections in this cycle have been deeper and longer than I was expecting. Certainly more drawn out than mid-cycle corrections of prior cycles. This has resulted in a longer cycle than prior ones, which was expected, but also deeper corrections on most alts across the board, which I certainly was not expecting. Since our first impulse, and he's talking about Bitcoin here, since our first impulse from $3,000 back in 2018, however, I have said my plan for spot was to load up on my favorite, fundamentally sound coins and sell at the end of the 5-wave cycle. So I'll just pause and note. He has been consistent on that. And he'll acknowledge this too. It's not that history literally repeats, but it kind of rhymes with itself. And that's why you'll see as we go through this, he's saying it's not like he could have known everything. That wouldn't. No human can. You can't know that. But he is saying in terms of the overall structure, you'll see as we go through this, it is doing what he's expecting here. And then he said, knowing that the largest gains occur in the last 10% of a major cycle, and understanding that there will be speed bumps along the way. I have also pointed out that most altcoins will likely have their final major runs after Bitcoin tops, just like we saw in 2017 as money rotates into altcoins during peak euphoria stages. With this being said, I am down on many of my spot holds over the last couple months, just like many of you are. Some I am even underwater on, like CRV, cryptocurrency. But the plan hasn't changed. The targets haven't changed. My plan from day one hasn't changed. Because despite the unexpected speed bumps along the way, which would be, again, deeper and longer mid-cycle corrections, we are following the timeline originally set out quite well, and the thesis hasn't changed. I will see you all at a likely end to this cycle in 2023. So that's his perspective. Everything's still fine, despite the, for those that are patient and are able to control their emotions, and I don't know that most investors can control their emotions, but for those that can, the opportunity is still there, which is why for me, in order for me to be able to sleep at night, I have to reduce my risk, which for me means doing nothing. It's the best approach for me personally. It's the most unsophisticated approach out there, doing nothing, but data shows, historically in crypto certainly, and you can look back to the stock market, that is the best approach rather than trying to time markets, because traders, almost all of them lose money, almost 100%. It's something like 90 to 95% of them. And the ones that make money, they're not making that much, and it doesn't mean that they're consistently going to make money. Maybe for whatever time the survey is done, you're making some, then that was a bit of luck. Who knows? Who knows? I'm just saying. There's so much good reason to be truly optimistic out there. And he's not the only one that thinks that there's good reason to be optimistic. In fact, take a look at this article from the Daily Hodl. Bitcoin is about to do the unexpected as one historically accurate indicator pops. So says analyst Nicholas Merton. I've been following this guy since the end of 2017. He's the only analyst I follow today that I was following back in 2017, because those are my earliest days of crypto. A lot of those analysts, they were fly-by-night. They ended up going away. And then a bunch of other ones, even they're still here, I'm like, nah, not for me. But Nicholas Merton, actually, yeah, I like this guy. Seems like a nice dude. He happens to not like XRP, but he's not tribal about it. I just think he's wrong on that, and he'd probably tell me I'm wrong if I ever spoke with him, but that's fine. I don't mind that. But yeah, I came across in my earliest days of crypto, and there's a reason his following has only been getting bigger and bigger. But check this out. Here's the article reads. As bearish sentiment mounts, closely followed crypto analyst Nicholas Merton says Bitcoin is about to surprise everyone. In a new strategy session, Merton tells his 516,000 YouTube subscribers that while price action continues to look grim for Bitcoin, one indicator is suggesting that the downward trend is behind us. So I'll just pause to note, What about that Bloomberg data with those articles? Could that be an indicator too? If so, it is one. We'll see. If Merton's right about what I'm about to share with you, then I think that the chart I just showed you, that was also a bottom indicator if this ends up coming to pass. But here's the quote from Nicholas Merton. I want to go out on a limb and make a bold claim about the crypto markets, especially as sentiment is incredibly fearful right now. That is that right here, right now, no matter if you believe that we have further to go down in price in the preceding months, that we're in a bear market, or if you feel that the recent correction was the bottom, right here, right now, it is much more likely than not that we're going to see a significant rally in price, recovering a lot of the losses, then continue down to the downside, end quote. Now, Merton says that big spikes in volume on Bitcoin's chart have historically served as reliable indicators to confirm trend reversals. He points out that volume spikes coincided with the bottom of the price corrections in both March 2020 and May 2021. With a large volume spike now printed following the collapse of the Terra ecosystem and the subsequent volatility in the market, Merton says Bitcoin is gearing up for an unexpected rally. And here's another quote from Nicholas Merton. The weekly time frame gives us a very good overview of when throughout history there were capitulation events, that there were major liquidation events in the market that effectively led to spikes in volume and therefore a significant decline in price. This market is driven by credit, is driven by leverage. A lot of the major moves upward and downward are caused by long-term players in the market who are taking on a little too much risk than they should. That has led to the exacerbated rallies in price, recoveries in the market, and all the new all-time highs that we've set. But it also played a role in the sharp 50% corrections that we've seen throughout this cycle many times before. End quote. So there you go. There's another metric to consider. And it is interesting. Like, I don't know if it sounds silly. If you're new in crypto, maybe this sounds silly to you, but the human sentiment out there, it really is an indicator typically. If human sentiment is really poor, and also if you're seeing a crazy number of negative sounding articles, historically, those are markers of the bottom, of the local bottom, right? It just is. There's plenty of data out there to prove it. And so I'm seeing a ton of that out there right now. Is this really the time to freak out and sell and have trouble sleeping at night? Well, I sure as hell don't think so. But let's go ahead and update the crypto fear and greed index. Let me hit refresh on this bad boy. Oh, it's down. It went down a point. It is at 11 out of 100. Updates again in 23 hours and 56 minutes. So the poor little typical retail buying lemmings out there, following one after another off a cliff to their own demise, are at 11 out of 100, indicating extreme fear. Folks, it just doesn't make any damn sense. It doesn't. I sleep so easy. I'm so excited for the opportunity. What else can I freaking say here? You let me know what you think, though. I'll wrap up here. I'm not a financial advisor. You should not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.